small move. That was a pretty good session, and I'm feeling pretty good about where the risk radar is right now because stocks today were really the only asset that continued their short-term trend, which has been developing to the upside. That's why I've got the green light there and yellow on everything else. Is we saw Bitcoin that was down, still chopping around. We saw the dollar lower again, even though it perked up the other day. Dollar did kind of firm up into the session though, while stocks were doing that at 2, and then bonds continued to have some chop as yields dropped, but we also did see that fade a little into the close as well. And here's what's so important is that days in which something happens that really it shouldn't, you need to take note of. The reason why stocks probably shouldn't have rallied today is because of the data. It was a terrible consumer confidence number. It was a big decline. It was in addition to a steady decline. You got to go back a long ways to find a period in which there's been such uncertainty and doubt and negativity about the outlook. However, it still was generally in the realm of what was expected. And that's why markets are fun, because when there are things baked in, you have to look for clues on knowing when they're fully priced through. And it's kind of looking like the drop in consumer confidence right now is priced through because you did see reaction in the bond market. Bonds rallied throughout the day. Bonds responded to consumer confidence, but a few key stocks helped firm up the market. So let's start there. Tesla, number 1. Really strong close for Tesla in the second half of the day. I keep talking about this because it is the Venn diagram of basically everything. Love him, hate him, doesn't matter what you think of Elon Musk. No derangement syndrome. You can't have that if you're going to be a stock analyst, if you're going to be a trader or investor. You just have to look at the price action. Don't get sidetracked with all the other stuff. Tesla overlaps with AI, overlaps with Mag 7 and tech. It overlaps with growth. It overlaps with the economy. They sell cars. And then it does overlap with policy as well. But that's why right now it's the high beta trade to watch, and it's moving to the upside, and it looks like people can't get enough of it right now, even on a otherwise kind of neutral day for stocks. The other one that I like to see move is CrowdStrike as well. CrowdStrike and Cloudflare both had good days, and that's telling you that there's stuff in the tech category that is immune, you would think, to the gyrations of tariffs or policy or whatever else. So that keeps a good bid into the market and reaffirms that tech does have a strong secular bid behind it. Now let's go back to the macro for a second. Dollar stabilizing, bonds doing it too. I'm looking at the TLT here kind of as a cheat for the chart to fit my narrative a little bit, which is that higher yields, lower bond prices is the way you want to go right now, and it will correlate with higher stocks. So even though today we did see bonds rally, they faded enough, and then the recent strength in long bonds, the TLT is kind of cheating because I'm getting more of the long bond portfolio, not just the 10-year. But this shows you a downtrend. Lower highs, lower lows. It's not quite like that with the 10-year, but when you stretch it out to the long-term TLT, which is what a lot of people get their bond exposure through, so I think it's a fair look, you see continued movement generally to the downside in price, which is good as well. That means that even with bad economic prints, there's not that much of a bid into treasuries. That is an optimistic thing to see. The other thing as well that I love, which is the dollar. You know, I love to watch the dollar. This dashed line, I've had this thing on the dollar forever. I'm not just doing it because that's where it's been. This is the area, and I expected us to come down to this area and find support. That's where my yellow light on the dollar was kind of off a little bit because the dollar got significantly weaker. It dropped all the way down below 103. But now it's back. It's back into familiar territory, and I've argued that continues to argue that tariffs are starting to get priced through. So this was a small day, but it was a step in the right direction. Assuming the economic data don't bomb the next couple days, it looks like we're still pretty steadily building momentum. I'll see you in the morning.